there are a lot of almost I lost some of my gadgets, so I had to postpone the class. So I'm really sorry about that. But one thing is for sure, we are back to learning, and we're back to learning right. Every day. So so people sent me their chats. They are showing me the progress from what they learned just from the first class. People think for you to have a working strategy, you have to learn something for a year. If your strategy can be broken into a simple, easy step by step process that can even just last 4 steps, that's actually the best. The easier your strategy, the more efficient it is. So we're back to learning, and I hope you guys are studying the recording I sent. Hope you guys can hear me. I mean, am I talking to myself? Can you guys hear me? Okay. So we're back to learning the proper way. So you guys, if some of you guys pay attention to some of the movements, well, this week is nothing to write home about, but you guys would notice the whole thing I taught in the first class because some people sent me their charts and I saw it and I wasn't really impressed. So, um, is Eukarya here? It's someone's supposed to be here. This person here or not. So the question class would be the fifth session. So after we've learned everything, then we're going to have a question session for when you've rewatched every single thing and you have questions to ask. So, but for now, let's get to the second topic, the second session. I'm not saying I don't see anyone with the monitor, anyone that's looking at this particular chat, be careful. It's skepticism, but like I have my reason for trying to take this trade here. Because BTC simply shows this zone here, and I'm waiting for the confirmation here. So I can see if I can take more buys to the upside. But careful, I'm not saying I don't run, go copy 'em. So let's start the session. Today's class is a very simple session, very simple topic, but you need to pay attention to grab some things. So, in the first class, I introduced market structure to. Oh, you guys cannot see my screen. Sorry. Oh, I'm not even see the setup why I share. Sorry, I'm coming. Let me share my screen. Sorry. You guys not see my screen. Wow. Oh, wow. Okay. So, in the first class, we introduced for the setup I was showing, I was talking about this. So I had because I feel BTC is still overall bullish to me. Not overall on the long run, but overall to this 8 something K. So it's been just moving from zones to zones. The last zone it came to was this zone, then gave a confirmation entry and I bought from there. Second zone is this zone. That triggered the zone. The zone I'm out to the 2 hours OB on the daily time frame. It's more clear here. Then I'm trying to get a confirmation by getting the 45 minutes structure shifts here, inducement, and this other block. So hopefully plays out as expected. So let's get into the actual reason why we're here. So in the first class, we introduced market structure. We talked about market structure. We talked about the basic patterns that market makes its movements, which is the trending market and the ranging market categorized. And then under the trending market, we have the uptrend, then we have the downtrend. Then I now said that there are things that we look out for when it comes to trading the structural part of our strategy. The first one being the concept of reversals, the second one being the concept of continuations. And then what did I say we trade reversal concepts with? This question is for you guys. What did I say we trade reversal concepts with? You guys can see my screen, right? Is my voice cracking? So you guys can see my screen, right? Like not currently, like now, can you guys see the screen movement? You guys can see the chat, right? Because I'm already sharing my screen. Okay. So, yeah, you guys answered correctly. I said the concept that we trade reversals with is called, and if the network is a bit shaky on your ends, don't worry, the class is recorded. So when we're done, I'll send the recording, you watch it, and then for the things you missed in this class, you can, you know, get it from there. And then we still have the question session finally for you to put everything together. So I said the concept that we trade reversals with is called a market structure shift. A market structure shift is basically, like I said, is an indication that the current trend the market is on is ending and the new trend is about to begin in its opposite direction. That is the reversal concept, one of the concepts that we trade market structure with. Now, secondly, the second one is called the concept of continuations. And I said the continuation concept is what we trade it with what you call multiple break of structure. I detailed it well to in fact I think the class went on for an hour of teaching about structure on its own alone. So I said the multiple breakout structure is used for trading continuations. It's basically a scenario where price breaks multiple key levels while maintaining the current trend of the market. So that was what we talked about based on structure. Then we talked about liquidity, and I said there are different types of liquidity, but majority of them are used for picking our TPs. But the one I talked about, which is inducement, is used for picking our entries. The is inducement is the liquidity that we get when picking our entries. After that, I talked about points of interest and I introduced one of the POIs that I make use of, which is what the order block. Now, after that, I said that there are scenarios whereby price is not going to mitigate your order block simply because there are other POIs that exist before the order block that markets may be interested in. So I said in this particular class that we're now going to talk about the second point of interest, which is how we arrived here. So hope you guys are all caught up in what we did in the first class. Okay, so now one of the PUIs I mentioned in the first class is the order block. I said the order block is a zone in the market where there are a lot of institutional orders. The zones where buyers, that's hedge funds, institutions, bankers, banks, and the rest of them put their buy and sell limit orders because their orders are so large. When they place orders in the market, it reflects on the chart with like some specific shapes of an order block. So I said the order block the bullish order block is what? You get a bearish candle and a bullish candle that engulfs it. Then the bearish order block, you get the bullish candle and the bearish one that. So this is the bullish order block, bearish candle, bullish candle that engulfs it. Bearish order block, bullish candle, bearish candle that engulfs it. Now that is the other block. So we already talked about how we pick our entries. So one of the trades that I gave last time was, I think, I don't know if this was among boom. You can literally spot it here. You can see price giving us a reversal concept. Remember, I said the zones where you get reversals from. The first one is daily time frame POIs, daily OB, daily breaker. Second one, other blocks that have a large candle closure. So this is a large body closure. This is an other block has a large body closure. So is likely that when price hits this POI, it would give us a reversal concept as an extra layer of confirmation. So when price took out this high, giving us a market structure shift, we got the structure part of our strategy. It came back here, gave us a pullback before pushing up to take out the body closure of our MSS candle, giving us our inducement. And then lastly, we got the point of interest, which will be the other block below the inducements, which is here. It's a pretty easy setup, and this was where the buy came from. Now, what if I told you that markets, like if the POI, if the inducement or something is, if this setup had a different kind of pattern or a different approach or a different outlook, that markets may have reacted from this other POI down here, or there's even a chance that markets would have bought from here. So, like I said, the reason why I used this example last week because if I still in because I was teaching about other blocks, so I wanted to just focus on setups that dealt with the other block. But let's say this scenario here, we're talking about multiple breakout structure now, right? Now, an example of a multiple breakout structure is when price takes out multiple zones while maintaining the current trend. So it's maintaining the current bullish trend and it's taking out this internal high, this high of the previous trend, this high right here as well, and this high here, giving us multiple breaks of structure. Now, with what I taught you guys last time, most of you would have been expecting price to buy from the other block below here. And one thing you notice is the market never came back there. Instead, it started buying from here and soared higher to the upside. So there's a reason why, and then we're going to tackle that in this particular class. There's a reason why in some scenarios, price buys from the other block. In some scenarios, price does not get to the other block. This second setup here, if we can spot it as well, price bought from this other block. The reason why this is the multiple break of structure, the internal high getting broken, the external high, the inducements, and then the other block. So there's a reason why in some scenarios, price will buy from this POI. In another scenario, price will buy from the other POI. And then it all has to do with the four rules of picking a proper point of interest. When selecting POIs, there are about four criteria that I check to make sure that price respects before I can pick the POI that I want to pick. Now, I already said that one of the points of interest that we use is called an order block. Now it's time to talk about the second point of interest that I use, which is called a breaker block. Hope you guys are following me up. Somebody shout power. Let's get the preaching started. Let's get the preaching started. So, like I said, the first POI that we use is called the order block. Yeah. Now, the other block, very functional, works well, good. But there are some times where you don't want to miss a POI simply because you are waiting for your other block. So simply because the other block is valid, or simply because the other block is a good POI or a valid POI to use some most times, does not mean that other POIs do not also exist in the market. Now, I combine 2 points of interest and I use the one that matches all the criteria that I have that I look out for before I pick a point of interest. Now, the other point of interest that I make use of is called a breaker block. Now, a breaker block, by definition, is called a failed zone or a failed order block. In to just bring it down to like a layman's understanding, it basically means the zones that price break through while creating your market structure shifts, or the zones that price break through while creating your multiple break of structure. So, for example, to have a market structure sheet, market price needs to deviate from the pattern that makes up the particular trend that is on. It means if you have a downtrend, for example, that's a series of lower highs and lower lows. For there to be a market structure shift, price needs to deviate from this downtrend and take out the last high, giving you a market structure shift. Now, the structure part of your strategy have occurred. To pick out what a breaker block is, the breaker block basically means the zones that price broke through for this MSS to be able to form. So market gave you an MSS and the candle that triggered the MSS has to close first. So let's assume the candle closed up here. The moment it closes, to be able to mark out your breaker block, you have to look at the highs because this was an MSS to the upside. So your focus will be on the highs that price broke for the MSS to the upside to be possible. If you check, you will notice that this high here was broken. That means the body of the high that was broken becomes a breaker block. This other high down here, the body of the high was also broken. It means that the body of this high becomes a breaker block. Remember, I said body, not weak. When we're talking about break of structure, MSS, our focus is always going to be on the body. Just that most times when price breaks the body, it also breaks the weak as well. But even if market breaks the body and does not break your wick, as long as the body has been taken out, that is a proper structure break. So when price gives us a market structure shift and the candle closes, or when price gives us a multiple break of structure and the candle that triggered that multiple break of structure closes, the moment it closes, to find your possible points of interest, you have to look at the zones that price broke through to be able to create that multiple break of structure or to be able to create that market structure shift. The moment you look at those zones are your breaker blocks. Sorry, your breaker blocks. So let's say it was an MSS with the downside. If you have higher high and higher low, higher high and higher low, higher high and higher low, then you get a an MSS with the downside. Let's say the MSS happened here and the candle closed here. Now, the moment the candle closes and you've gotten your MSS, the next thing to do is to spot your possible points of interest. Now, first thing you look out for is your breaker block. Your breaker block basically means the zones that price broke through for your MSS or for your multiple break of structure to be created. In this scenario, we're dealing with a market structure shift, a reversal concept. It means I'm looking at the zones. In this scenario, it was lows that got broken. So I'm looking at the lows that price broke through for my MSS to be able to be created. So if I'm looking, I'm going to see this low that price took out and the candle closed here. That means the breaker block would be the body of this low that price took out for my MSS to be created. Now the candle closed here. That's why we did not mark any more breaker blocks. But let's assume that this candle did not close here, but it closed down here. That means another breaker block that will be included is the body of this low that was taken out for our MSS to be created. You guys are following me up, right? Are you guys following me up? Somebody shout power. You're following. If I ask, are you guys following me up? Shout power if you're following me up. Understand? Mhm. So, so like I said, the breaker block are the zones that price breakthrough for your MSS to be created or for your multiple breaker structure to be created. Now, I'll mark out something on the chart and I want you guys to show me which one is the breaker block. Now, Now, let's go to the chart. So if you notice, you can see price on a previous downtrend. You can see market giving you a series of, towards the end, this lower highs and lower lows. And towards the end, you can see lower high, lower low, right? 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 The next thing that price did was what? To give us so what happened here? When market took out this high and closed above here, what happened? When price took out this high and closed here, what happened? So it took out this high and it also took out this high here. The candle closed up here. So it took out two zones, this high and this high. What happened when we got this? Exactly, a market structure shift. Someone said a multiple breaker structure is not a multiple breaker structure. Multiple breaker structure is when you are looking to trade continuations. When market is in a particular trend for an extensive period of time, and there happens to be a change in direction. Before that change in direction will come in, you need to see a market structure shift first. It's only moving forward that you can now start looking for continuations. Yeah. So first things first, you have to look for reversals first of all. That's one of the most important things. Reversals first before continuations. So we got a market structure shift. Now, how many zones got broken for this MSS to be created? So you got this high and you got this high. What does that mean? How many breaker blocks do we have here? I want this to be an interactive class. We have two breaker blocks. The two breaker blocks that we have is what? This high that got broken, the body of the high, right? This other high that got broken, the body of this high. That means we have two breaker blocks. Now, because we have two breaker blocks, it means we have gotten two POIs here for now. Then the next one that we're going to look out for is our final point of interest, which will be our order block, which is below here, which is this bearish candle and this bullish candle that engulfs it, which is down here. So we have about how many points of interest? We have 1, 2, 3. Now, mind you, any of these three POIs can be used for market to start buying to the upside. This first POI, this breaker here, this first one can be used. This second one can be used, and this third one can be used. The one we are going to use is the one that obeys all the rules of picking a proper point of interest. That's one you're going to choose. So first things first that you do is to what? Get the structure part of your strategy by either identifying a market structure shift or identifying a multiple breakout structure. The moment that happens, you wait for the candle that triggered your MSS to close or the candle that triggered your multiple breakout structure to close. Then you start looking for possible points of interest. The possible points of interest you look out for are the zones, highs or lows that price broke through for your MSS to be created or for your multiple breakout structure to be created. Those zones are your breaker blocks. After that, you now look for your other blocks, which they have specific shapes. So let's take here, for example, we have market on a previous downtrend. Yeah. And when market will change directions to the upside, it has to give us a reversal concept first. At this other block, it gave us a market structure sheet, taking out this high and closing above the high. The moment it happens, how many zones the market break through? It broke just towards this high. That means we are just going to have one breaker block. The breaker block is what? The body of this high that price broke through while creating the market structure shift. So we have one POI, which is this breaker block. After that, the next thing to look out for are the other blocks. So if you look down here, you can spot one OB. And if you look down here, you can spot another OB. Now, the reason why this OB here, I picked my entry from the week, and this one I picked my entry from the body is because I told you guys that if the week of the other block is small and the body is large, or the body is long, you pick your entry from the week. But if the week is long and the body is small, you pick your entry from the body. That's why this entry was picked from the body and this was picked from the week. So how many POIs we have? The breaker block, which is the zone that was broken for our MSS to be created, which is one POI. The second one is the other block, which is another POI. Then third one is another other block, which is another POI. Mind you, all these POIs can be used for market to buy. All of them are valid, but the one you're going to pick is the one that obeys all the rules of picking a proper point of interest. That's the one you're going to pay attention to. And we're going to talk about those rules soon. So I'm just trying to explain to you guys how we pick our possible points of interest. Now, another example is here. We have markets taking out this high because we've already gotten a reversal. So meaning that moving forward, our focus will be on continuations. So continuations means for price to take out more than one zone while maintaining the current trend of the market. The more than one zone means the high of the current trend because we're looking for an uptrend, the high of the current uptrend and the high of the previous trends. The high of the current uptrend you can see here, and the high of the previous trend you can see here. So now, to mark out our possible POIs, market gave us a multiple breakout structure up here, and the candle closed here. The moment the candle closes, to pick out your possible points of interest, you have to first of all look at the body of the zones that price broke through for market to create the multiple breakout structure. We're looking at this high, and we're looking at this zone too. But luckily, two of them are on the same line, so you can just categorize them as one breaker, which is one of the POIs, a breaker block. So this is one. After that, you look at this high that was also broken. The body of this high, which is here, becomes a breaker block as well. So this is a breaker too. And then the third one you're looking for is your other block. But luckily for us, we can generalize this as one point of interest because the breaker block and the other block are on the same line. So we can just categorically call them one POI. I think I've seen something they say I don't know if it's ICT, I don't know, but someone calls it, I think it's unicorn. I don't know, unicorn, zebra, anyone. I don't know for them. I don't know what to call it. It's just a collection of two POIs existing in one set in one zone. The breaker block, which is this high that got broken, the body of the breaker is down here, and the other block is also down here. So I can just categorically call them one point of interest. So this is one POI, which is the breaker. Then down here is the second POI, which is what the other block with a combination of the breaker block. So you have 1 and 2 points of interest. Funny thing is that either one of these POIs can be used for price to actually buy. Do you guys understand? When I'm done, I'll show you guys this setup because I took it. It was around last September, and I will show you guys the current one as well. All these setups I'll show you guys. So that's how you get your multiple breaker structure and then your possible points of interest. This scenario here as well, we have price taking out the high of the current uptrend because we're at an uptrend. And if you're looking for continuations, you focus on the high of the current uptrend being broken and the high of the previous downtrend. So a market took out the high of the current uptrend, these other highs here. We got what you call a multiple break of structure. Show you guys how you guys could have gotten multiple entries using these rules. So you have multiple record structure. The moment they can do closed, to pick out your possible points of interest, you have to pay attention to the body of the zones that was broken for price to be able to create our multiple break of structure. So this is our multiple break of structure closure. The body of the zones that was broken for price to be able to create that. This high that was broken, the body of this high becomes a breaker block. This high that was broken, the body of this high here becomes a breaker block. This other high that was broken here, the body of this high becomes a breaker block. Down here is another high that was broken. The body of this high becomes a breaker block. And then below here is the other block for the trade down here. So in our hand side, we have about how many PUIs? 1, 2, 3, 4, and then 5. Like I said, all these POIs, markets can use any of them to reverse. The one it will use is the one that follows all the rules of picking a proper point of interest. Hope you guys are following me up, please. Okay, okay, okay. So, so now I've given 1, 2, 3 examples here. 1, 2, 3 examples here. I gave another example here. Now, I wanted to use okay, well, I'll use this trade that I'm taking now as another example, but it not show up on this time frame. So let me just take this and let me go to gold. Gold price action has been shitty, but there are trades I took earlier on this year that I can use as an example as well. So now there's one thing I will tell you guys. While dealing with an all-time high, the moment market gives you a multiple break of structure, even if market gave you the multiple break of structure and an inducement forms below the all-time high, and then price eventually gives you an all-time high, your focus should be on the like I don't know how to do it. Let's say this is an all-time high, right? And then you have another high here, and the market is giving you higher high, higher low, then it gives you a multiple break of structure. If market should give you an inducement here and then still pushes up again to give you to take out this all-time high, automatically your focus should be for a new inducement to form at the all-time high. Price will most likely not go below this all-time high if it's still going to maintain this uptrend. So the focus will be pure eyes that exist above this zone. Because normally with normal logic, this is a multiple breaker structure. And then people would have said this is an inducement, which is correct. And then they'll start looking for their POI here. But if market does not trigger this point of interest and before the all-time high gets like market makes an all-time high, the focus will now be from POIs that exist from this all-time high upwards because price may likely not come down here. So it will just retest the PI that exists at the above the all-time high. So that's where more continuations will come in. All-time high, all-time lows. So I want to take this for this example on gold. So we have markets on an uptrend, giving us a series of higher highs and higher lows. Towards the end, it took out this high, which is the high of the current trend of the markets. Then it took out this high here as well. And then it took out this high here. And then the candle closed. And then normally we'll take this as our inducement. But this particular trade is an all-time high on gold. The market made an all-time high. It did not trigger our POI. If it came from here to trigger our POI before buying, yes, it's valid. But it took out the all-time high. That means we're looking at a new inducement, and our POI will not be the one that exists above the all-time high. It will totally ignore this one below here and then just keep buying. When the next time it will come out, it will probably just go lower. So I don't know if you guys understand what I'm trying to explain. Normally, the normal process, if it gives you a multiple break of structure, inducement and POI, yes. But if it gives you a multiple break of structure, inducement, and then before triggering your point of interest for inducement, it makes a new all-time high. All those POIs that exist below the all-time high, disregard them at that particular moment and focus on the ones above the all-time high. Do you guys understand what I'm trying to explain to you? Don't worry, you understand. But you rarely have all-time high case. Market does not form all-time high all the time. So yeah, don't worry. So this is what I'm talking about. You have markets on an uptrend, taking out this current high, this high, and then this high, giving us a multiple break of structure. After that, the market made an all-time high and closed above here. To find our possible point of interest, you have to look at the body of the zones that was broken for price to be able to create your multiple break of structure. This high was taken out, the body of this high becomes a breaker. This high that was taken out, the body of this high becomes a breaker. This high that was taken out, the body of this high becomes a breaker. Down here is the other block. You have about one, two, three, and four possible point of interest. Same thing here. We have market take out multiple highs, this current high, this previous high, this high, and this high, giving us a multiple break of structure. The moment they can do closes, you have to pick out the zones that price broke out to be able to create a multiple break of structure. The body of this high that was broken becomes a breaker block. The body of this high that was broken down here becomes a breaker block as well. And the body of this other high here becomes another breaker block. Then down here is another block. So that's just basically how it exists. Gold price action has been shitting, so I'm low balling here. But this is it. Multiple break of structure. This high, multiple highs got broken. Then after that, when the candle that triggered the multiple break of structure closes, pick out the zones that was broken for price to trigger that multiple break of structure. Those zones are your possible points of interest. Markets can use either one of these zones to continue buying or continue selling. So that's basically what I'm trying to explain to you guys. So do you guys understand already how to pick out your possible point of interest? The reason I keep saying possible point of interest is because it's not a certain POI because we've not pinpointed the particular one that markets will react from. I am saying possible because either one of them can be used. So the moment you now pinpoint it, that's when you can now pick one. So how do we now determine the one to choose? That is where the rules of picking a proper point of interest comes in place. So now let me get those rules. Now, there are about four rules that I pay attention to when it comes to picking a proper point of interest. Now let's start. So first of all, the first rule is very simple, and I've been shouting it and screaming it since. And it's very, very, very important that you do not disregard this rule. The first rule says the point of interest before you start looking for anything at all, whether you're looking for POIs, whether you first of all need to get a market structure shift or a multiple break of structure. That is the first rule. So the first rule is saying that before you look for anything, whether you're looking for MSS, sorry, whether you're looking for a POI, whether you're looking for the second point of interest, you need to get a multiple break of structure or a market structure shift. So let me see. Yeah. So the first rule says ensure there is a market structure shift or a multiple break of structure. The reason of that being that the possible points of interest that we need Other block is one of them, and the rest of them is a breaker block. And for you to get your breaker block, you need to get the body of the zones that price broke through for your MSS to be created or for your multiple breaker structure to be created. That's why the first rule is ringing and saying, before you start looking for POIs, first of all, ensure that you've seen a market structure shift or a multiple break of structure. I'll ring it again. Before you start looking for your possible points of interest, ensure that you have seen a market structure shift or a multiple break of structure. This first example, did we see our market structure shift or did we not see it? This previous downtrend that price took out these highs, did we see our market structure or did we not see it? We saw it when price took out this high, and it even took out this high here as well, giving us a market structure shift. After that, we know we've gotten the first rule of picking a proper point of interest. Now, what do we do next? We actually look out for the possible POIs. So the highs that was broken for market to create this MSS, the body of those highs become breaker blocks. So you look at the body of this high, it becomes one of the breaker blocks. Look at the body of this other high that was broken, it becomes one of the other breaker block as well. So 1, 2. Then finally look for your other block, which is going to be the bearish candle and the bullish one that engulfs it, because the bullish other block, which is always usually at the start of the zone that market gave you that MSS from. So it's down here. So you have 1, 2, 3 possible points of interest. So you've gotten the first rule. Now let's talk about the second rule. The second rule says ensure there is an inducement slash liquidity. Now, um, Ebuka FX, listen. The first rule told you that you should get a market structure shift first or a multiple break of structure. After that, it did not tell you after you've gotten this, enter the market. That's not what it told you. It says after you've gotten this, secondly, ensure there is an inducement on your setup. Now you that has FX in your name, that have not withdrawn from your broker or your prop firm before, and you have FX in your name, you now ignore the second rule, you ignore the third rule, or you skip it, and then you rush and mark a point of interest and market to destroy you. Then you now come online and start shouting Forex is a scam. To God that will punish you. Now, are you guys following me up? Now, the second rule says ensure there's an inducement. Now, when I was teaching you guys in the first class, I told you guys what an inducement is. Is what? The first valid pullback that market gives you after an MSS or after a multiple break of structure. Even the inducement is telling you to get an MSS first. It's telling you that for there to be an inducement, there needs to be an MSS first. And the first one is telling you before you pick a point of interest, ensure there's an MSS or a multiple break of structure. Two scenarios are telling you that you should look for an MSS or a multiple break of structure first before you look for any other thing. You better list Nebuka FX. So this is an example of an inducement here. You have a trend, let's assume a downtrend, then you get a market structure shift. After that, the candle that triggers the market structure shift closes, because the candle has to close first of all. So let's assume this is where the body of the candle closed, and up here is just a wick. After that, the inducement is the first candle, not is the first retracement that you will get to the downside, because the MSS was to the upside. You have to get a retracement to the downside that eventually pushes up again to take out the zone that the body of this MSS candle closed at. So whether it's just one single candle that pulled down before that zone got taken out, or whether it was multiple candles that pulled down, the moment price takes out the zone that the MSS candle body closed, you can now mark out the last low you can see there before that zone got taken out. That is your inducement. I try to explain this as simple as possible. So let's just get an example here. This is our MSS, and the candle that triggered our MSS closed up here, the body of it. Our focus is the body, not the wick. If the wick gets taken out, it's also good and fine. But our focus is always the body, because sometimes market can take out the body and not take out the wick. So This is our MSS candle. This is the body of the MSS candle, the body closure. After that, the next candle that came out gave us a pull back to the downside here with a candle wick. After the candle wick, market pushed up. And then what did it do? It closed above this body zone and closed above the wick as well. What does that mean? It means that this low, this retracement we have here is an inducement. Are you guys following me up? Now, that is what an inducement is. Let me look for another example and show you what an inducement is in that scenario. The way price action has been these days, if you see set up 10 Jehovah. Now, this one is actually very, very, very obvious because it's not just a single candle wick. We have our market structure shifts here. Now, the candle that triggered the market structure shift to happen before this high got taken out, this was this candle here, and they closed up here. This is the body closure of our MSS candle. After that, our focus will be for the next candle that comes out, or the next two candles, or whichever one, to give us a retracement to where this MSS came from. And after that, to push up and take out the zone, this high that the MSS candle closed. So if you check, the next candle that came out gave us that retracement, came down here, then pushed up all the way here until this high got taken out. The moment this high, the zone that the MSS candle closed, the body of it closed, gets taken out, you can mark the zone that the retracement came down to as your inducement, which is here. Another example, multiple breakout structure. Here, the moment we got the multiple breakout structure, we already marked out our possible points of interest by marking out the highs of the zones that price broke through for our multiple breakout structure to be created. After that, we marked out our other block. Now, after that, the second thing to look out for is the second rule, which says there needs to be an inducement. Now, like I said, the inducement is the first valid pullback that market gives us after an MSS or after a multiple breakout structure that proceeds to take out the body closure of your MSS candle or the body closure of your multiple breakout structure candle. This is our multiple breakout structure. Up here is the wick. I remember I kept shouting, our focus would be for the body to be broken. Down here is the body. After that, the next candle that comes out after it closed gave us a retracement to the downside. And then when it pushed up, it came all the way up here and took out the body closure of this multiple break or short candle, but it did not take out the wick. It does not matter. As long as it closed above the multiple break or short candle, the body closure of it, not the wick. If it closed above the wick, it's good and fine as well. But if it does not, as long as it closed above the body, it's also good and fine. So down here, the retracement that was made becomes our inducement. Are you guys following me up? Someone said, what if the candle that comes after the MSS or the multiple break or shorter does not have a wick? That means you have not gotten an inducement yet. Well, like I said, by definition, it says a pullback. If someone says for you to go to school, you need to have 200 in your JAMB and 50 in your pursuit TME, and then you score 200 in your JAMB and score 30 in your pursuit TME, you have not met all the criteria. That means you've not passed, so you're not going to school. The two criteria means get a retracement by having a week or a pullback, and then take out the body closure of the MSS candle or the body closure of your multiple break or short candle. If you fail any of those criteria, you've not gotten an inducement yet. I'll give you guys one example like that. Let me find. I think I have an example like that. I have an example like that. here, yeah, it's an example like that. There's an example that here. So this is an example of a multiple break of structure. This high of the current high of the current trend, the current uptrend, and then this high of the previous trend, and then this high of the previous trend as well. Now, when market took out all these zones and the candle, the body and the candle of the multiple break of structure closed, it closed above here. So it means you have to look below to find the possible points of interest. This high that was taken out for the multiple break of structure to be created, the body of this high becomes a breaker. This other high, the body of this high becomes a breaker. This other high, the body of this high becomes a breaker. Down here is the other block. Now, after that, the next thing to look out for is your inducement. Now, this is the body closure of our multiple break of structure candle here. Now, the next candle that came out took out that body closure, but it does not have any candle wick below it. If you check, zoom out, there's no candle wick below it here. If there was a candle wick, I can mark it as my inducement, but there was no candle wick below it. That means I've not got an inducement yet. It was the next candle that came out that gave me a retracement with a candle wick, and then price now pushed up and took out this body closure of the multiple break of short candle. It was after taking it out and giving me this candle wick that I will now mark that one, that candle wick, as my inducement. Hope you guys are following me up. So now, so it's very important to be able to pinpoint where your inducement is, pinpoint the proper inducement, because your POI really depends on that. But your POI exists depends on where your inducement is. Trust me, if you pick the wrong zone for the inducement, you will end up marking the wrong POI sometimes. So let's talk about. So we've talked about the first rule. We've talked about the second rule. Let's talk about the third rule. Now, the third rule says, let me find what the third rule is. The third rule says, and the point of interest needs to be unmitigated. Now, first of all, by definition, mitigation means price tapping into your point of interest after there has been an MSS or after there has been a multiple break of structure. Every rule here keeps telling you to first of all wait for an MSS before you start looking for any other thing. Mitigation, by definition, means price tapping into a point of interest, but especially after there has been an MSS or after there has been a multiple break of structure. If after market gave me this MSS here, and I marked out my possible point of interest, which would be, let's say, this is where it closed. Here is the breaker block, one of them, and down here is another breaker block. If market, when creating this inducement, touched this breaker block here, it means that it has mitigated the breaker block. So it's basically ensuring that when market was creating your inducement, the point of interest you are looking to use as your entry, market did not touch the body of that point of interest. Let's say this is our MSS, right? The market gives us a market structure here. And then this is where the candle closes. We have our possible points of interest. The first zone that was broken, which is a breaker, another zone, which is another breaker, then down here, probably the other block. Now, for this zone to be mitigated, when market is creating your inducements, any zone that it touches, where creating the inducement has been mitigated. So if markets when creating inducement touched the body of this breaker block here, it means that this breaker block here has been mitigated, therefore disqualified as an entry. Any point of interest that you marked out after an MSS or after a multiple breaker structure, that when market was creating inducement touches the body of the POI, we are going to disqualify that point of interest, is no longer valid to be used as an entry. Any point of interest that you marked out after an MSS or you marked out after a multiple breakout structure, while market was creating your inducement, if it touches the body of that POI, you are going to disqualify that point of interest. It is no longer valid to be used as an entry. So if the inducement here actually came down to this level before pushing up, that means we're disqualifying this breaker and we're also disqualifying this one. So that's basically what the third rule is saying. It's saying that the point of interest you're looking to use as your entry needs to be unmitigated. By definition, it means it needs to not have been touched by your inducement candle. That's basically what it means. I hope you guys are following me up. Now, like I said, if it touches the body, if it touches the wick of a breaker, it's still valid. Our focus will be on the body. So that is the third rule. The third rule says the point of interest needs to be unmitigated, meaning that wherever the points of interest that you marked out is, and market touch and your inducement kind of touches the body of those POIs, you're going to disqualify them. So from this example, we have our market structure shifts, and this is the candle closure. After that, the possible points of interest we have, this high, the body of this high becomes one, a breaker. This other high that was broken, the body of this high becomes a breaker block as well. Then down here, the other block. Now, this is our inducement candle. Now, how many zones did our inducement candle touch? How many POIs that were in this one candle? Which ones did touch? We have one, two, and three. How many? Which of the POIs did our inducement candle touch between one, two, and three? How many and which ones did it touch? It touched two. That is number one and number two. What does that mean? The first one here, disqualified. Second one here, disqualified as well. The only one that market did not touch is what? The other block below. So therefore, we only have one PUI here. So it's very easy to now pick your point of interest because you just have one. But let's still follow the last rule, which now says pick the point of interest closest to your inducement. That means my inducement candle is below here, right? And these two are already disqualified, leaving just one. But if you're going to follow the last rule, says pick the point of interest closest to your inducement. So this is my inducement here. Once you trace the inducement down, the first point of interest you're going to meet is the other block down here. That is why the buy came from this zone. This trade, um, exactly here. This trade right here. Now, so that's how you apply these concepts. So first of all, you take the first rule that says ensure there is a market structure shift or a multiple breakout structure. That's the first rule. The second rule that says ensure there is an inducement slash liquidity. Your inducement is your liquidity, an example of liquidity. Third rule, the point of interest needs to be unmitigated, which means whichever point of interest that you marked out when market gave you the MSS or multiple breakout structure, ensure that market, while creating your inducement, did not touch the body of those POIs. Anyone it touched has been disqualified. So third rule, the fourth rule now says pick the point of interest closest to your inducement. By the time you must have disqualified some and left some, you pick the one that is closest to your inducement. So let's take this other example here. We have our market structure shift here. After that, our possible points of interest, the high of the zone that market broke through for the MSS candle to be created, here becomes your breaker block, one. Down here is another block, two. Down here is another block, three. We've gotten the first rule that says that this should be an MSS, a multiple breaker structure. Second rule, ensure there is an inducement slash liquidity. We got the inducement down here. third rule, the point of interest needs to be unmitigated, meaning that any point of interest you're looking to pick, ensure that while creating the inducement, the market did not mitigate or touch the body of that POI that you had marked out as your point of interest, those POIs you had marked out. Anyone that price touched, disqualify it. So if you check, this is the what, this number one, price touched the body of that breaker block, the body of this number one, and even went into it, deep into it. What does that mean? This particular POI here has been disqualified. Leaving just what? This number two and number three. Now, the last rule says pick the point of interest closest to inducement. Now, if you are tracing from the inducement down, which point of interest are you going to meet first? Is it number two or number three? Someone keeps asking me, pasting questions. The guy posted a question like 20 times while I'm still teaching. How can I be teaching and answering questions at the same time? I said already that we have question sessions already. I'm not even done teaching the class, and the person is, how can I pause and start reading your question when I'm still teaching? So yeah, we have number two and number three, right? Exactly. So the one that is valid between these two is number two. So that is where our buy is going to come from. So let's go to that. Yes, so that is why the buy came from where number two. So the other block and the stop loss will be below the other block that we picked. That's why the buy came from here. If our inducement, if when market created our inducement, yeah, it came down to this zone before pushing up. It means the inducement candle mitigated this other block. So when we're picking our entry, our entry will come from where this third number three here. But inducement candle did not touch this number two. It only touched number one, meaning that the next PUI is going to be the other block. This particular number two other block, not this one down here. So it's good to mark your inducement properly, because wherever your inducement is, below your inducement, the immediate point of interest you see below the inducement is your PUI. So we've talked about this one and the reason why we picked our entry from there. Now, let's talk about this continuation here. Now we have markets give us a multiple break of structure by taking out this high and this high. After that, we have the closure and we have the possible points of interest, which is number one here and number two here. We have the second rule that says there needs to be an inducement, right? Which is the inducement here, the pullback. After that, the third rule that says the point of interest needs to be unmitigated. It means whichever point of interest you had mapped out, ensure that when market was creating your inducement, it did not touch the body of that POI. And if you check, this is our inducement. It touched the body of our breaker block, this number one here. So that means this has been disqualified, leaving just this number two. So you already know that it's only one point of interest that is left. But if I see to pick from the last row, pick the point of interest closest to your inducement. Tracing it down, the one you're going to meet is what? The other block here. That's why this buy came from there. Same thing here. Let's move forward again. Multiple breakout structure. The first row, ensure. I hope you guys are following me up, please. So the first rule here, ensure there is a market structure shift or a multiple Guys, I'm back. I don't know. Zoom just froze up. Like it just froze up. Like literally froze up and then just logged me out. I had to copy the link I sent to you guys to join back again. I don't know why. Like it just like Zoom froze up and then closed me up. Like literally. Let me go back to this, the one I was explaining again. Just froze up and closed me out. Like I don't know why. Yeah, but I'm back now. So this is the example I was talking about here. So let's go back to that. Now, just because you learned this does not mean you are immune to stop loss. I take stop losses too, please. Just that when dealing with trading, it's not only based on technicals. You plan your trades, you plan how many times you trade. Your risk to reward matters a lot as well. So when you lose small. When you win high. So even if you take two losses and one TP, it will cover up everything with more profit. So don't think you're going to disregard everything that has to do with trading and the discipline because you learned from Tony Ike. When you go cry you. So this is the first example the example I was on. I said we have the multiple breakout structure here. First rule. Second rule, you should ensure there's an inducement or liquidity. This is the zone that the candle that triggered the multiple breakout structure closed. The inducement is what? This candle that has the wick and then took out the body closure of this multiple breakout structure candle and the wick as well. That is the inducement candle. The third rule, the point of interest needs to be unmitigated. It means the point of interest you're looking to pick, you should ensure that the inducement candle does not touch the body of that point of interest. And if you check, our inducement candle did not touch the body of any of our points of interest all the way down here. All of them are still valid to be used as an entry. None of them got mitigated by the inducement candle. Then finally, the last rule now says pick the point of interest that is closest to your inducement. Tracing down from our inducement between 1, 2, 3, and 4 and 5, which one is closest to where our inducement is? Someone said 2. It's not number 2. It's number 1. It's number 1. It is number 1. So you have to be very careful. Don't worry. If you're having difficulties, watch the recording and you are going to get it. Practice, watch the recording, you're going to get it. So it's not number 1. If you're tracing down from your inducement, the first point of interest you're going to meet is not number 2, it's number 1. How you go jump this one, enter the other one. So it's remember, if you're picking your breaker block, you're picking from the body of the breaker. So it's not the wick, it's the body of the breaker. So this is the one. So your stop loss covers the candle of the breaker block towards the next POI itself. Can do towards the next POI because the first one is the valid one and the second one is not. So I can literally keep my stop loss at the second POI because I know the first one is the valid one. That was why the buy came from here. So that is why the buy came from here. Now, this example that I marked with this inducement thing here, this is it. The multiple breakout structure. This candle that took out this zone does not have a candle wick below it, so we've not marked our inducement yet. It was when this other candle put down and then the zone now got taken out that we have the inducement. Thirdly, the point of interest needs to be unmitigated. It means that all the POIs that you have marked out, ensure that the inducement candle does not touch the body of those POIs. And if you check, none of these POIs got mitigated by the inducement candle. 1, 2, let me name it. 1, 2, 3, and 4. So if you're picking from 1, 2, 3, and 4, which one is closest to our inducement? Which one? Someone said, how do I know where to place my TP? Calm down, Ebuka FX. John Chigozie, calm down. We've not gotten to that class yet. Calm down. It's number one that is closest to our inducement. So from the inducement, we're going to meet this as our POI. That's why the buy came from there. So that is the simple way that we pick our trades. That is a simple way that we pick our entries. That is how I pick everything. So that's why, well, this trade that I showed you guys today, if you have in mind, well, this is how I picked it. So I already marked out this zone on the daily that I expected price to come to for me to get an MSS. Then towards the end, that's if BTC is still bullish. Remember, even if you want to take this trade, manage your risk. Because at this moment, I don't understand price action. But towards the end, I can see lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. When I'm talking about this, I'm talking about the body. Then the next thing the market did when it triggered this zone was to come up here and give me a market such a shift, taking out this zone. After that, he gave me a pullback. It's my inducement. Then the nearest point of interest is now here. From here. So that is the other plus. That's why I have the entry there for this BTC. So hopefully it was. So this I followed all my rules of got the MSS, got the inducement, look for the POI. This breaker here is a POI. The body of the breaker did not get mitigated. That's why my entry is there. So that is the rules of picking a proper point of interest. Yes, it's recording. So it's recording. Guys, most people are asking me questions that just calm down. We are like calm down, stop overcomplicating things. We've not gotten to some kind of topics yet. We've got some topics, some things will be clearer to you. For now, everything I teach is what you should focus on. You understand? There are more classes to be done. You are rushing everything just off of two topics. In fact, leave your MT5 alone. Don't be in a hurry to lose. Calm down till we're done with classes. There's a question session I said is in the fifth session. We have questions. Just calm down. So that's that for this session. Yeah, that is that for this session. Someone said what time frame is the best. There's no subjective time frame that's the best. I check if the time frame I'm on does not present me a proper MSS. For example, if I know there's a zone I marked out and I'm expecting an MSS from there, and price comes there, but it seems that the candle movement is a bit tricky and I cannot really see it. I can switch time frames, 30 minutes, 45 minutes, 1 hour. I don't go above, I do 1 hour, 45 minutes, and 30 minutes. That's mostly what I use. So, yeah. So that's that for this session. I hope you guys understood. I hope you guys learned something. I hope you guys understood what I taught you guys. If you're having difficulties, the recording will be dropped once the recording is done processing. And then you go through it. We have a question. So it was I normally had 4 sessions, but I started adding an extra session for questions. So we're going to have question sessions after everything is done, after you backtested everything, after you've compiled everything, and then you write down the questions you have. We have one single question session that is just for question and answer. So that's all when we are done with the take profit levels. Because our next class is on different types of liquidity and take profit levels. Then the other class is directional bias. Then we will now have the question and session answer. So I hope you guys understood what was taught. And if you don't, feel free to just backtest and then keep your questions for the question session. Because obviously, I may not really be able to attend to everyone in my DM because there are over 100 people here. So the question session is the time I have for you guys for questions in regards to this. So it was pleasure teaching you guys today. Um enjoy the rest of your night.